Fannie Mae, the market and rates for 22 and prices. So let me go ahead and get started here. Fannie Mae mortgage rates and home prices will rise in 22. Economists expect mortgage rates to average 3.3%, home prices to increase 7.4% in 2022. Economists at Fannie Mae expect increased mortgage rates and home prices in 2022 to higher inflation, tightening of monetary policy, and low home inventory. Fannie Mae, in its economic forecast, said it expects the 30-year fixed-rate mortgage to average 3.3%, in 2022, up from 3.1% GA projected last month. Fannie Mae attributed the uptick in interest rates to the Federal Reserve's expected tapering of asset purchases, including mortgage-backed securities. For this year, Fannie projects rates to average 2.9%. According to the Freddie Mac PMMS survey, the average 30-year fixed mortgage rose to 3.05% for the week of ending October 14th, the highest level since April. Even a modest tightening of monetary policy would, of course, impact housing, but we expect the effects to be largely muted given current market conditions, said Doug Duncan, Fannie Mae Senior Vice President, Chief Economist. Anything on that, Darren?
Well, I think the component that is regulated there is the tapering. So, they always want to, their tapering is going to be based on making sure it doesn't have a huge impact on the market because they want stability. So they've talked about tapering next year, but if it has a big impact, they'll back off of tapering. They've done it multiple times. So they're going to help ease into a more stable environment where they're not having to buy back so many mortgage-backed securities.
Even a modest tightening of monetary policy would, of course, impact housing, but we expect the effects to be largely muted given current market conditions. In terms of home prices, economists at the GSC are forecasting a 16.6% increase in 2021, which is 1.8% higher than projected in September. In 2022, the economists changed the outlook on home price increases to 7.4% from 5.1%. Despite new single-family home construction being in high demand, has been hindered by the low availability of materials and skilled labor. Those obstacles will continue next year, the economist said. According to the latest forecast, total home sales will decline to 6.54 million in 2022 from 6.77 million sales in 2021. Single-family mortgage origination projections for 2021 remained flat at about 4.3 trillion. Fannie Mae is now projecting single-family originations in 2022 at 3.30 trillion, up from September's forecast of 3.25 trillion. Mortgage rates may rise in response to the tighter environment, but we expect the severe shortage of homes for sale to remain the primary driver of strong house price appreciation through at least 2022, limiting interest rate effects on home sales and home prices, said Duncan.
Right. That's big right there. That statement, house price appreciation through at least 2022. That's all of next year that they're predicting we will have continued increase. You talk about the numbers. They talk about 4 million homes short that we need to build to meet demand in the country. We're talking nationwide now. Houses get built slowly. There's no way they're going to catch up anytime soon, and the affordability is what's keeping it down a little bit, and why we'll have less volume going into the future. They're predicting lower volume next year than this year, and it will be the rising prices that will help mitigate that, and hopefully we get enough built to help bring balance to the whole supply-demand component.
And I was going to say it's a bit of good news on both sides. Maybe not as good for a seller, but for buyers, hey, it's not 16.6%, it's 7%.
Right.
And for sellers, it's still up, but not as aggressive as this year. So
right. And the distinction we keep making in the local market, at least, is the homes with desirable components that check a lot of boxes, are still selling fast, multiple offers, over list price. And where people are kind of seeing a slowdown, where they're questioning whether the market is still strong, are homes that aren't prepped well, homes that don't show well. And those homes are sitting a little longer and selling for less than list price.
Yeah, yeah, that holds true always.
Yep.
Fannie Mae also slashed its forecast for the economy in 2021 for the third consecutive month. Real gross domestic product, GDP, Fannie said, is expected to grow 4.9% this year, compared to the 5.4% it had forecast in September. Annual inflation for 2021 is expected to be 5.7% higher than the 5.4% it's projected in September. The main contribution will come from the higher energy prices domestically and abroad. The economists expect that the Federal Reserve will announce a tapering of asset purchases in its November meeting. Also, the central bank may hike the federal funds rate by 25 basis points in the fourth quarter of 2022 for the first time since December 2018. Wow.
Yeah, it's been a long time. 40
Things are
years.
changing. Yeah.
But, you know, they've been very low for a long time. And that's probably, that will be the most likely impact on pricing is an increase in rates. Now that 25 basis points doesn't always translate exactly to a quarter point higher in interest rates, but it's usually somewhat on par with that. Inflation, not a good thing for, you know, costs of living on a daily basis. But if you own property, often inflation works in your favor. So this is why, that's one of the biggest reasons the housing market has been so hot through the pandemic, is the expectation of inflation, which they've been talking about for years, and we haven't fully seen the impact of that yet.
Okay. Well, there's some news. That's great. We'll track that as we go.